Alrighty, everybody, welcome back to the beginner series 0 to 100 episode 2. You already know what this video is about, so let's get right into it. But before I start, all of you guys should go watch episode 1 as well as my TradingView video that kind of sets you guys up on downloading your apps, downloading your brokerages, right? Getting everything kind of together, learning how to paper trade so that way we don't go in here wasting real money, right? Paper trade, if you don't know what that means, literally just go watch my video, First Steps with TradingView. It kind of sets you up on all of that. Now, if you watched all of that and you're ready for the next episode, let's get right into it. So we're going to be defining most of the beginner terms, right? Things that if you have absolutely no experience with trading, you need to know all of this stuff, right? So this is the very, very basics. And then if we have time, we'll kind of get into more of the advanced stuff. So right off the bat, I have all of our terminology here. Your homework for today is once you're done learning all of these terms and whatever else I decide to teach, you're going to be going into the charts and identifying everything. You're going to be able to point out all examples. You're going to show, I would say, at least 3 examples of each of these things, right? An example of when you would want to do any of these things, point out what these things are, right? You should be able to understand these things very, very fluidly because these are the building blocks. When I'm on stream, when I make videos, when I talk to you guys about trades, I use all of these terms all the time, and if you don't know what it is, you're just going to get lost, and you're going to be like, wait, 80 trades, I don't know what happened. How did you do that? I'm like, oh, I could tell you didn't watch episode 2, bro. I could tell you didn't watch episode 2. So let's get right into it. So what does it mean to go long, and what does it mean to go short? These two are terms that are very, very linked together. To go long is very simple. It means that you believe price is going to go up. So let's say that right here, for some reason, at 9:15 on Tuesday, June 30th, I'm like, I think price is going to go up. For some reason, I'm going to go long, which means I buy a contract here. If you don't know what a contract is, you should watch episode 1. I'm going to buy one contract here of the NASDAQ 100 index futures, and I believe price is going to go up. That means that you are going long. But let's say that you're at Tuesday, June 30th at around 3:15 p.m., and you're kind of like, I think price is actually going to come back down. I don't think we're going up any further today, but I want to make money. But how do I make money when price goes down? You go short. So what does short mean? It basically means that you borrow someone else's stock. Let's say that you saying, hey, bro, let me borrow one thing of the NASDAQ 100 index futures. They're like, all right, bet. All right, I'm letting you borrow it. You're going to get it, and you're going to sell it to someone. So let's say you sold it for $30,575, right, roughly. Then it goes all the way down to here. You buy it back for $30,091, so that's about a $500 difference, and you give them the stock back. You're like, here you go, you can have it back now, I'm done borrowing it, and you pocket the difference. So let's say that it started up almost $600, and you sold it back down, and you gave it back to them at $30,000 flat. You made about $600 from nothing. All you did was, or from selling short, that's what it's called, right? The guy, he gets nothing, right, because you just borrowed it and you gave it back, no harm, no foul, and you pocket all of your money. Now, I know to some of you guys, you're saying, whoa, borrowing, is that debt, is that this, is that that? In all honesty, that's the basics of it. That's the technical stuff. When I say short, that's technically what's supposed to happen. In reality, none of that's an issue. There's no really any borrowing, right? Sim trading, which we'll get into later. All these things you're not actually really borrowing anything from anyone, but that's the idea of it. So if you're saying, oh, I'm going to go short, all you really need to know is that you think price is going to go down. And if you're going long, you think price is going up. Make sense? I told you guys the basics because I don't want you guys being like, I don't want you guys getting checked and they're like, oh yeah, you know how to trade. What does it mean to go short? And then you guys are like, I don't know what it actually means. I just think, you know what I'm saying? I want you guys to at least know the basics. So the basics of it is you borrow a stock and you buy it back at a lower price. You sell it and buy it back at a lower price. Does that make sense? Makes sense. And then long is very simple. You just buy it and sell it at a higher price, right? Now, what does bullish and bearish mean? Bullish just means it's going to go up. Bearish is just down. So let's say that I think we're going to go up. I don't say, oh, I think price is going to go higher. I will say, oh, I think price is going to be bullish. Why do people call it bullish and bearish? I don't know. That's just how we do it. For some reason, we just made up a term. Instead of saying up and down, we say bullish and bearish. Why? Again, don't ask me. I didn't invent it. This is just how it is. So, for example, right now, price is moving down. You would say price is bearish. And this time, you would say price is bullish. Right? Makes sense? Bullish is up, bearish is down. Remember that. Bull is up, bear is down. Don't get the two mixed. I don't want you guys telling me, oh, bro, I'm super bullish right now, and then price is dumping, and then you guys are going to be like, oh, well, my bad, I mixed it up. Okay? Don't get lost. All right, those are the very most basic terms, right? So if you're bullish, you're going to want to go long. If you're bearish, you're going to want to go short. Make sense? Makes sense. Got you. Candlesticks. Now, this is actually an important one, so let me kind of get ready here. So candlesticks is these things that you see on the chart here, right? All these little green and black boxes and lines and all this nonsense on the chart. These are called candlesticks, and each of these represents price at a time period, right? So each of these candlesticks, first and foremost, represent time. So what does that mean? It means that within each of these candlesticks represents a certain amount of time where price was. So for example, I am currently on the 15-minute time frame. You can see on the top left corner here where my mouse is, the 15-minute time frame. That means that each of these candlesticks is actually 15 minutes long, which means from the start to the end of the time frame of the candle is 15 minutes, right? I can go down to the 5-minute, and it looks a little different, but it's the same thing. The candlesticks represent 5 minutes, 3-minute, 1 minute, 1 hour, 4 hour daily, right? So that means that each of these candlesticks represents where price was for that time, right? So from 7:45 to 7:46, we can see right here, this candlestick that I have my cursor on right here represents 1 minute of price action. If we go up to the 15-minute and we look at this candlestick right here, this latest one that's forming, it's still forming, but it's going to close in 15 minutes after it opened, right? So 15 minutes after 8, it's going to be at 8:15. You can see that matches up, right? We got about 12 minutes left on this candlestick. It's still forming, right? All these candlesticks represent time at a time in this time frame, right? Does that make sense? So each of these candlesticks on the 1 minute represent 1 minute. Okay, kind of get it. So each of these is worth 1 minute of time, 5 minutes of time, whatever. But what does it actually mean? What do the lines mean? What do the bodies mean? What does this boxes mean? All that good stuff. So I drew up 2 examples for you guys, so I can kind of define these. The green one is a bullish candle, and the red one is a bearish candle. What does that mean? You should know, because up and down, right? You guys should know these terms already. So what it means is that, here, actually, let me move this one right here. So the body represents, on a bullish candle, represents 2 things, or a few things. On a bullish candle, the bottom of the body, this is called the body of the candle, the rectangle. The start of the rectangle, the bottom of the rectangle, is called the opening price. So we can go in here, define it as opening price. Right, so that means price started at the bottom of this bullish candle, and the top of it, you can probably guess, is the closing price. Go here. So that means price opened right here, and then it closed right here. That's the body of the candle. So if you guys see me talking about candles, I'll say, oh, look at the body. Like, this one's all body, right? There's not really any lines. There kind of is. A little bit of lines here and there, right? But there's also candles like this skinny guy right here. You guys can see, right? Smack dab in the middle, Wednesday at 9. All wick, it's all big lines and very little body, right? So you would say, oh, this one's all body, this one's no body. That means the closing price and the opening price were not very different. Okay, but what does the big lines mean? These are called wicks, right? And the wicks represent that price was at these points in the, so let's say there's an hourly candle. Within the hour, at some point, we went down to this price and this price, but we didn't stay there, right? So at some point, we opened and we went all the way down to this little line I drew, but it didn't stay there, and it went all the way back up. It came up to here at some point. We don't know when, right? You have to zoom in on the lower time frames to see when exactly. But we see that it came up into here, but it didn't stay there either. It actually sat somewhere in the middle. It sat right here at the closing price. And for a bearish candle, it's the exact same, except it's the opposite. The top of the body on a bearish candle is the opening price, and the bottom of the body is the closing price. You just flip them, right? They're like upside down. Closing price. And the same thing with the wicks. At some point, it came up into here, but it didn't stay there. And at some point, it went as low as this, but didn't stay there, right? So the wicks, the bodies, you should know what this means, right? And again, if you zoom in, we'll get into this formation. This is called candle structure. We'll kind of talk more about how candles, why they form like this, how they form like this, in a sense, later in the series. But for now, we're just going to keep it very basic. Opening prices and closing prices, right? So let's say we look at this candle, right? This big body right here. From Tuesday at 9 a.m. So from 9 to 10 a.m., what can we tell about this candle? Well, it opened all the way down here, and it went down just a little bit, just a little tiny wick. I don't know if you guys can see that very well in the recording. Little tiny wick, little tiny thing at the bottom. It did not stay there for very long. It went all the way up, super, super big, strong push up. And again, it had a little bit higher, but it actually pretty much closed right at the top. And we had a very big body. And then again, for this wick, this candle right here from Wednesday at 9 a.m., all wick. It opened up here, went all the way down to here, didn't stay there for very long, went all the way back up, Didn't stay there for long either, and closed pretty close to where the opening price was, right? Not a very big range there for the body. And then for bearish candles, again, same thing. Whoa, look at this guy right here. This big guy in the middle right here. Again, it opened all the way up here, went up just a little tiny bit, then crashed all the way down here, went a little bit lower, but honestly, again, pretty much closed at the bottom of this candle. There's not a lot of wick on this candle, right? So now you guys should be able to vaguely read what these candles are doing, right? Maybe you don't know where they're going, but you know what they're doing, right? And again, if you zoom in, you'll kind of get more context, right? So like, let's highlight this giant black candle right here. So you see this giant down close candle, this giant bearish candle. It kind of just looks like, oh, well, it was just one crash, right? I mean, it looks pretty crazy. But if we zoom in on the 15-minute time frame, we kind of get more context. Okay, actually, it kind of was a bit of a crash. But let's keep going, right? Maybe we'll get a little bit more context if we keep zooming in on the 5-minute. All right, let's go to the 5-minute. Again, okay, so now we know it was a crash, but actually the first roughly 25 minutes of the candle opens from 9 to 10 was actually didn't really do anything in the first 20 minutes. And then we go a little bit lower in the 3-minute time frame, right? And the same thing. Okay, actually it was the first 27 minutes. Now we get a bit more context. And right before it crashed, it actually had a little bit of a wick up here, and then it went down really quickly. And then you can finally go all the way down to the 1 minute. It's pretty much as low as you ever need to go. And now we know the full story. So the full story is this: price opened at 9, and actually it moved pretty slowly up until around 9:30, right when market opens. See, now you know, oh, it wasn't 9 a.m. It was actually 9:30 a.m. when we started moving really rapidly. We had a big wick up, right? So the 9:30 candle opened, had a huge wick up, and then it went all the way down within 1 minute. And each of these candles again represents now 1 minute. So now we know, okay, it went down for about 3 or 5 minutes, kind of went up a little bit, and then from 9:30 to 9:36 to about 9:50, we just straight dropped like crazy, had a little bit of a move up, and then again we finished up the candle all the way down here, and at 10 o'clock we closed pretty much at the bottom of this whole move, right? So now you should be able to read, oh, okay, so that's what these candles are doing. Now you should be able to know how time frames work roughly, right? So that's long, short, bullish, bearish, candlesticks. You should read candlesticks and time frames. I kind of included that explanation, but the same thing. Time frames is what I was talking about: 15-minute candles versus 1-hour candles versus 4-hour candles, right? It just means that's the time frame. So if I say on stream, if I'm like, hey, I'm on the 10-minute time or the 15-minute time frame, you should be able to know, okay, that means each of these candles represents 15 minutes, right? Makes sense, guys? Trends are very easy to understand. Trend just means, are we going up or are we going down, right? So for example, right now, from in this highlighted area, I'm going to highlight this area. Are we in an uptrend, a bullish trend, or a bearish trend? Are we going up or are we going down? We're going down. This is a bearish trend, right? Why is it bearish? It's very obvious. We're moving lower, right? We have a low. We come up a little bit, but the high does not reach the high of the previous high, and then we go lower than the previous low. So what would you call this? It's called lower lows and lower highs, right? Because each low goes lower than the last one, and each high is lower than the last high, right? So low, new low, new low, new low. We're going down, 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 right? It's pretty obvious, honestly. Like I don't want to have to explain like lower highs, higher lows, but right, for the beginners, I know you guys are beginners. I'm not trying to diss you guys. I'm not trying to make you feel small, but that's what it is, right? Is it going up or is it going down, right? So trends just mean where are we going, right? Again, now if you look in this highlighted area, is this an uptrend, a bullish trend, or a bearish trend, right? It is a bullish trend. We're very, very bullish. We're going up, right? Makes sense? And then there is these periods where it's called consolidation, right? So example is right here. This is called consolidation. I don't have it listed, but this is a type of trend. It means that we're not really going anywhere, actually. We're kind of going up. We're kind of going down. We're going up. We're going down. We're going up. We're going down. We're not really picking a direction yet. Does that make sense? And that is very important to know as well. We'll get into more specifics on how to use consolidation, how to know when we're done with consolidation, how to know when we're doing reversals, right? All those good things. But for the most part, all you need to know right now is trends. Are we up? Are we down? Or are we not doing anything at all? Consolidation, bullish, or bearish, right? So that is what trends are. Reversals, I kind of hinted at it right now as well. But a reversal just means that you think that we're currently up, but actually I think that we're going to start moving our way down now, right? It just means that you thinking that this trend is not lasting anymore, we're going to actually go the opposite direction. So for example, if I'm at the top right here and I'm thinking, oh, I think that the bullish trend is over, I think we're bearish now, you would say this is going to be a reversal, right? Makes sense. We're reversing where price is. And then finally, we have stop loss and take profit. So these are very, again, basic terms. And if you watch my paper trading video, you should get an idea of what they are. But basically, the idea here is that let's say that we're in a long, right? Let's say we're in long here, right? We just tapped into this area where I think we were going to go higher. This, we can't obviously be in a trade forever, because if we're wrong and we keep going lower, we're losing money, right? Because we bought it all the way up here, 30,010, right? 30,010. If it doesn't go any higher, we're losing money, right? If it keeps going lower and lower and lower all the way to 29,000, we just lost $1,000, right? That's crazy. And we don't want to lose money, that much money, because then you're going to blow all your money. Or if you have margin, you're going to owe money, which none of you guys should ever use margin, by the way. Very obvious. If anyone ever tells you, oh, we're going to have a margin account. Margin is debt, right? Don't ever trade margin. That means you're trading money that's not yours, right? But anyways, sorry, got off on a tangent there. I don't want you guys to be a bunch of debt. But point is, if you want to go up, it can't. If you're wrong, you don't want to be so wrong that you lose all your money, right? You want to only be wrong enough that you lose a little bit of money and then you survive and you can go to the next day, right? And vice versa. You don't want to be right, but then you keep thinking, oh, it's going to keep going higher, but then you're getting greedy and it doesn't go any higher. Now it comes back down. Now you're like, oh, I wish I sold it at the top instead of at the bottom, right? So a stop loss prevents you from losing any money. So let's say I have here, the gray zone is going to indicate roughly where my stop loss is here at the bottom of this gray rectangle. So let's say I'm in long. I'm going to say my stop loss is at this level, 29,952.75. So now I'll only lose about $60 instead of $1,000. And my take profit is at this level, 30,115.75, right? So that means, okay, I think that I'll make about $110, $105, and then I'll be happy, right? Good enough. I'm not going to try to get more. You could get more, but we also don't want to risk it, right? We want to secure profits when we can, right? We want to make money when we can, because at the end of the day, we're all about making money. We're not trying to catch the whole range, right? We're not trying to be, Einstein and pick the perfect spot. We're just trying to make our money and go home, right? Make sense? So that is what that's called. And then there's a few other terms here that I didn't list that I wanted to find right now. So stop loss, take profit. Take profit means that's where we're going to take our profits. That's where we're going home, right? We're closing the trade and we're done. We're going home. Or stop loss is where the trade, again, we're closing the trade. We lost. Let's go home, right? We're done. There's also some things called runners. I did not define this in the term. So if you don't know what a runner is, if you're in the future videos and I say, oh, I got a runner and you didn't know what it was, it's because you didn't listen. So anyone, if you guys catch anyone commenting in the videos, what does runner mean? I don't remember that in the terminology video. That's how you know they didn't watch. So if you watch the whole thing and you know what a runner means, comment runner. Say I know what runner means, right? Comment that in the comments so I know that you actually watched the video. A runner just means that, let's say that at this level, let's say you're trading 10 contracts. A runner would be that at this level you take off 9 of the 10 contracts and you let one of them keep going, right? You let one of them keep going because you're like, yeah, I want to be pretty much done here. But just in case we keep going even higher, I'm going to let one of them run further. It just means that you're just going to let it run. If you're leaving runners, that means that you're pretty much done trading, but you're like, yeah, we could probably squeeze a few extra dollars out of one extra contract. Then that means that you'll let one runner go to the high, right? You'll let it keep going. Maybe you think, oh, how cool would it be if I could get one of those all the way to the top, but I don't want to risk my whole portfolio. I'll just leave a runner. That's what it means. It means that you're leaving 1 or 2 contracts left to do whatever they want, right? You don't mind if they go all the way up, or you don't mind if they crash, right? Oh, and then one more term that I actually forgot to mention is break even. So break even just means that, let's say that we're in a trade, right? Let's say we're in a trade and it fills us in here, and then it's kind of almost at a target, but now it's kind of stalling out. Now it's kind of like this, right? If your trade looks kind of like this, you're like, oh man, I like that we're almost there, but I don't want to lose, like, I don't want it to come all the way down and lose $200, right, out of my stop loss or whatever your stop loss is. But you also don't want to just close it because you think, oh, we could potentially still keep going. I just don't want to lose money. What it means is that you'll move your stop loss to the area that you entered, break even, which means that if it comes down to your original entry point, you'll just close the trade for $0, right? Your break even. So break even is a great risk management tool. It means that, hey, I still believe in this trade a little bit, but I don't want to lose any money. I want to be smart with my money. So that means that I'm going to go break even, right? So it's a way to manage your risk without closing the trade. Does that make sense? Because let's say like you don't want to close the trade. You're like, no, I still think it could work out. I just don't want to risk it in case I'm wrong and lose money. I'll go break even. So runner and break even are the 2 extra ones you guys don't know. Now, for your homework, I want you to look at the chart and I'll tell you exactly what I want you to do. I want you to paper trade and I want you to try both long and short I know you don't have a strategy. I know you don't know what any of that. I know you don't know if you're right or wrong, but just roughly take a rough guess, right? In an uptrend or in a downtrend, in a bullish trend or in a bearish trend, just roughly guess and go down to whatever time frame you like and just say, you know what, I'll just take a trade long or short, right? Just look at the where we are right now and just go long or just go short and just kind of look at it, kind of get a feel for how it's supposed to work, right? Set a stop loss and set a take profit and just let it run. If you start making money, go break even, right? Do everything that I just taught you. Now this is called market structure, right? So there's another term I didn't define here, but market structure just means that you're looking at if we're in a trend, right? Reversals, all that type of stuff. So just take a wild guess, right? You don't have to be right, but just kind of take a wild guess, take some paper trades, take some notes, right? Notice what you're doing, right? You guys may be watching this in the future. Should be able to say, oh, is this a bullish trend? Is this a bearish trend, right? Write it down. Just very obvious, point at it and define it, right? And do it on a few time frames. Do it on the 15-minute, right? So for example, if I'm on the hourly time frame right now, I'll say, oh, we're in a bearish trend, right? We're in a downtrend. Or right now on the 1 minute, oh, we're kind of forming an uptrend, right? So I want you guys to kind of just notice that. Don't have to do anything with it too crazy yet, but just look at it. And that's pretty much it for today. Also, you should be able to identify candles. You should be able to know what all of this means. In the next video, I'm not holding your hand. I'm not going to be defining anything. It's straight knowledge from there, okay? Awesome. Sorry, I'm like talking super fast, out of breath. I just realized I was spitting bars. This whole video trying to get you guys set up for the good stuff. I know this is very basic, very boring. Most of you guys probably know what this means already, but for the beginners, I know it's going to help you guys out a lot for future videos. So without further ado, I'll let you guys go. I'll see you guys in episode 3, and I hope you guys will be there joining me then. So peace out, everybody.